Yes. Okay. Yeah. Thank you so much for having me. I'm really glad to be here. And yeah, I'm going to talk about blockchains, what they are, and how they differ from the computer systems we've had before, without going into too much details. But and then most importantly, I'm going to talk about how we can use this in many different areas and many different kinds of applications. And once I got the question, where can I get a blockchain for Christmas? And I haven't yet found the answer for that, but maybe you can help me by the end of this. And that's because blockchains are a bit abstract, but we'll start with something very concrete. And that's my friend Jen from the Philippines. Jen moved to Denmark to work, and every month she sends money home to her sister, who still lives in the Philippines. Unfortunately, when we send money to developing countries today, banks and money transfer services and other middlemen charge on average 9% in transaction fees. And when you live in a poor environment, those 9% can mean a lot to you. They can be the difference between being able to afford the medicine you need or not being able to afford it. So 5 years ago, I moved to the Philippines and started my second company together with 3 co-founders in Manila. And we managed to get the cost of sending money to the Philippines down from about 9% to about 2%. So that was a good improvement. But how were we able to do it? Well, instead of trusting in banks or other middlemen to move value across borders, we instead trusted in blockchain technology to move money into the Philippines. And today, in the case of money transfers from Korea to the Philippines, it's actually 20% that happen by trusting in blockchain technology. So let's talk a little bit about trust, because this is essentially how we do trust today. We trust in financial and legal and political and other institutions that are often slow and often expensive, and they're only accessible to people living in certain parts of the world. Blockchains are actually digitizing trust. Blockchains are making trust free, efficient, and even accessible to the billions of people that are living in countries that today do not have access to trusted institutions. And in those cases where blockchains can remove the need for a middleman, you could even say that blockchains are making trust obsolete. So I'm going to talk today about how blockchains are digitizing trust or making trust obsolete in financial transactions, charity donations, a bit about transportations, and how this can also hopefully help us fight corruption and poverty in the world. But first, what is a blockchain exactly? And I think that a blockchain is actually a world computer. We can think of a blockchain as a world computer, and we can compare this to the personal computers that we use every day. So our personal computers are pretty great. We can download apps, we can install apps, we can run apps on our personal computers, and we get results pretty quickly. Personal computers are pretty fast. But they can also easily get downtime. If we lose power or the hardware breaks, our apps have downtime. And it's very hard to trust our personal computers because they can be infected by virus or they can get attacked by hackers. On the other hand, a blockchain is a world computer in the sense that it's a network of tens of thousands of individual computers connected in a network over the internet, connected, and together they form a world computer. And actually any personal computer can become part of the world computer by you installing an application on your personal computer that connects it to this global network. And on the world computer we can also install apps and run apps. When we do so, the application is run almost exactly the same time on every one of these 10,000 individual computers. So the same application is actually run 10,000 times over. You can imagine that running the same application, the same software code, 10,000 times in order to get your result is not particularly efficient. So at least with the current blockchain technology, this is not very fast. You cannot run the latest 3D video game in the world computer, for instance. This might be improved in the future, but with the current technology, you cannot do very complex calculations. But on the other hand, we have no downside, because even if 1,000 of the individual computers in the world computer break down, the remaining 9,000 computers in the network will keep on running your application and giving you the result you want. So Bitcoin was the first blockchain. It started in 2009, and it has run now for 9 years without any downtime. And I think very few other systems or financial systems can claim this, or any computer systems at all. But that's what blockchains can do. But most importantly, we no longer need to trust the hardware that we're running our application on. Because even if 1,000 of the individual computers in the network get infected by virus or get attacked by hackers, the remaining 9,000 computers in the network will keep on running your application in the correct way and giving you the correct result. And the way that consensus is achieved in the world computer is by saying that the majority of computing power in the world computer decides which is the correct way to execute your application. So as long as more than 50% of the computers in the network are not infected by virus or attacked by hackers, you will get the correct result from your application. And that's something entirely new and unique, not just in financial transactions or property registry, but even in something as fundamental as computer science. Scientists have been trying to solve how can we get a global network of computers where we cannot trust any single one. But by putting them together, we can trust the aggregate result of what they're doing, even though we can't trust any single one. And that was what blockchains did for the first time when Bitcoin came in 2009. The inventor of Bitcoin essentially wanted to create a digital currency that was decentralized and didn't have a central bank. In order to do this, he thought, I also have to create a blockchain. And so he invented that concept as well. But what Bitcoin does is, basically, it just allows you to move money from account A to account B. But every time you do this, you're executing a small application, a small computer program that says move money from account A to account B. But that's pretty much what Bitcoin can do. It cannot do much more than that. But then in 2015, Ethereum came, and Ethereum was the first general purpose world computer, in the sense that now you can not only run applications that say move money from account A to account B, you can program anything you want, any kind of application, and put it in the Ethereum world computer and have it execute your application. And what Ethereum and the blockchain community as a whole is calling smart contracts. It's just another word for applications that run in the world computer on the blockchain. So I would claim that Bitcoin and Ethereum were so far the two major technological milestones in developing blockchain technology, but I'm also sure there will be some new ones. But these are the two most important ones to follow right now, in my opinion. And the use of these systems have been growing very quickly. The amount of transactions happening on Bitcoin and Ethereum per day saw a huge explosion in late 2017, and now it sort of dropped back to this normal exponential curve. So if this growth continues with about 150% growth per year, then there'll actually be more blockchain transactions than Visa card transactions in a few years. But we'll see. The amount of assets issued, financial assets issued on blockchains, also saw a really big growth in 2017. Now we've had a bit of a correction, and now it started growing a bit again. It's, I think, short term, this might still be a bubble, it might still go down. I do think long term that when we look at the potential markets that blockchains can address, which is of course currency, but it's also stocks and bonds and real estate, intellectual property, transportation. These are huge industries that blockchain can address, and in that perspective, I think this is still quite small long term. We're right now at about $400 billion for all assets issued on blockchains. But of course, the most important statistic for how this is really growing is that there's now more Google searches for Bitcoin than for Donald Trump. And of course, I'm half kidding here. I'm half joking, but only half, because this does show how many people are hearing about this now for the first time, and are learning about it and using it for the first time. And at least it was a very big day in the Bitcoin community when Bitcoin became bigger than Trump. So, what are some of the applications happening right now with blockchains? Well, the first use of blockchains really were in financial transactions because of Bitcoin. And financial transactions have worked for the same in hundreds of years, because we have one bank here and another bank there, and we have separate accounts and separate databases in each bank. So when we want to send 10 euros from an account in one bank to an account in another, the receiving bank adds 10 euros to their database, and then it's important that the sender bank remembers to subtract 10 euros from their system. If they forget to subtract the 10 euros, well, then we just created 10 euros out of nothing, and that could give us all kinds of interesting situations, such as hyperinflation and so on. So we want to avoid that. And that's why we have accountants and notaries and auditors and so on, making sure that these rules are followed. But blockchains do this fundamentally differently, because instead of having separate closed databases, a blockchain is a shared open database. Because you can imagine, if you have a world computer, you can also have a world database. And so on the blockchain, everyone can connect to the same shared database, and it doesn't really matter what you enter in this database. You can enter that Peter sends 10 euros to Alice, that Bank A sends 20 million euros to Bank B, or that Alice sends 4 Google stocks to Charlie. Anything that you can represent in a digital format, you can enter into the blockchain database. And because now there are millions of people all over the world that can all connect to this same system, it's also in a way like everyone is auditing everyone else. Because, for instance, if I were to try to write a message and send this into the network that says, Lasse now sends 10 million euros to Annika, then I could send this message to the rest of the network, but everyone else would be able to see that Lasse did not previously receive 10 million euros, so I'm not allowed to send 10 million euros to another person. And you would also all be able to see that I'm not the European Central Bank, so I'm not allowed to issue 10 million euros. So it's like everyone is auditing everyone else, and in this way, millions of people all over the world can now for the first time send pieces of digital property to each other in a way that is mathematically guaranteed to be safe and secure, and that everyone can verify is correct, without the need for banks, central banks, or clearing institutions, but simply using a peer-to-peer communication system. So that's the fundamental innovation of blockchains in financial transactions. And that's perhaps why the Wall Street Journal said this is quite simply one of the most powerful innovations in finance in 500 years. And to talk just a little bit about cryptocurrencies, because until we have stocks and euros and dollars on blockchains, people thought we need to have something to send to other people. And so these currencies were invented. And I put currencies in quotes because I think it's up for debate what they really are. I might argue that they might be something else. And they've been under a lot of criticism from central banks and so on for essentially being worthless and having no value at all. And some say it's just a big tulip bubble that might explode tomorrow, and the value of all these will go to zero. I think there might be a correction. I think it's unlikely that they will go to zero. And that's because there is an inherent value in these, and that is that you can, whenever you need to make a transaction or run an application on the world computer, you need to pay a fee. And the only currency this fee can be paid in is on the Bitcoin blockchain, it's in Bitcoin. On the Ethereum blockchain, you can only pay this fee in Ether, which is its own native cryptocurrency. And so to take Bitcoin as an example, it's not only Bitcoin you can make transactions in on Bitcoin. In the country of Georgia, they have issued 100,000 land titles for real estate property on the Bitcoin blockchain. And there's a company called Tether that has issued $2 billion in bonds or IOUs on the Bitcoin blockchain. And whenever you want to make a transaction using the blockchain with these dollars or these land titles, you need to pay a small fee, and you can only pay this fee in Bitcoin. So in order to make these peer-to-peer, decentralized, and very efficient global transactions, it creates demand for these currencies, and that's why I compare these currencies more to stamps, because a stamp is also just a piece of paper. It doesn't have any value in itself, but because you can use the stamp to send letters, that makes a stamp useful and valuable. And it's the same with these digital currencies. They are just zeros and ones. They don't have value in themselves, but you need them in order to create transactions, and thus they have value. But there are admittedly huge problems with the current volatility of these digital stamps or digital currencies. They've been extremely volatile. But I do think it's likely they will become less volatile in the future. And to give an example from history, this is the price of petroleum over 100 years. Petroleum was first became really useful in the middle of the 1800s, and it started being traded globally in the middle of the 1800s. And the price of petroleum was extremely volatile in the beginning, when no one really knew what can we use this for and how useful is it? How big is this industry going to be? As people found out, it became much less volatile. And I think we'll see the same with these digital currencies. This is still so new, it's so immature, but I think in 50 years it'll be a lot more boring what the price of Bitcoin will be. The question is, do we want to wait 50 years? And companies such as Tether do not want to wait 50 years for Bitcoin to mature. So what they did was that they issued dollar tokens, dollar IOUs on the Bitcoin blockchain. And so if you hold one of these Tether tokens, then Tether as a company promises that they will always give you one physical dollar if you return one of the token dollars to them. The problem is, of course, what happens if Tether goes bankrupt? Then your money might be gone. So we probably want to see national currencies on blockchain systems in the future. And when this happens, I don't know, but they are experimenting with it in Singapore, in Russia, in Canada. I saw also some discussion of it from the Swedish central bank, but I think it'll happen somewhere, but I don't know when. But perhaps even more disruptive are the projects of decentralized stable currencies, which are essentially projects to create central banks as applications that only exists in the world computer. So two of these projects are Maker and Basis. And to give just an idea of how it might work, I'll use the example of Basis. Basis wants to create an algorithmic central bank that only runs as an application on a blockchain. So Basis wants to issue Basecoin, where one Basecoin is equal to $1. If the price of one Basecoin goes above $1, then the central bank on the blockchain will issue more Basecoin to increase the supply and drive down the price back to $1. If the price of one Basecoin goes below $1, then the central bank on the blockchain will issue bonds to buy back Basecoin and decrease the supply of Basecoin, thus driving up the price of each Basecoin. These are actually sort of the same tools as normal central banks use today. Here it's just made in software instead of being executed by politicians and central banks. And I won't guarantee that these projects succeed. I think it's still up for debate, and we will see. But there's very big companies that think this will happen. So Andreessen Horowitz, probably the most famous venture capital company in Silicon Valley, and Bain Capital invested just $130 million in Basis. So they think this will succeed, and I think if it succeeds, it'll be incredibly interesting, because if we have stable currencies that we can send anywhere in the world, do we then still have a role for central banks to play? I don't know, but we'll see. So now that we have value on a blockchain, we can of course also do investments and crowdfunding. And last year, the concept of initial coin offerings, or ICOs, exploded. And what it actually is very similar to Kickstarter that you might have heard of. So you have an idea, you want to create a new pair of shoes, for instance. You're an entrepreneur that wants to release a new pair of shoes, and you need $10,000 to start. So on Kickstarter, you can ask people to invest in your project. And if you don't get $10,000, then all the money is returned to the investors, but otherwise you get to keep it and you can start your business. But you can also do this on a blockchain using a smart contract. And remember, a smart contract is just an application that runs on a blockchain. But say my friend Jen wants to create a new business and she's looking for money to run it. She creates a smart contract with an account, with a blockchain account, and she asks people to pay in money, but only one or a few people pay in money, so it's not enough. So after 30 days, the smart contract automatically returns the money to the investor. On the other hand, if she raises the full amount, the contract can automatically forward the entire amount to Jen, so she can start her business. And the interesting thing here was that Jen or the investors did not need to trust Kickstarter or another broker or middleman. They didn't even need to trust a court system or a government to enforce this contract, because the contract is automatically enforced by the blockchain world computer. And that's an entirely new type of contracts that we've never seen before, and I'm sure that lawyers and attorneys will have a lot of fun looking into what can we do with smart contracts. But once she raises her funds, the contract can also create tokens that are then distributed to the investors. These tokens can represent anything, but they might be vouchers or gift cards that the investors can now use to purchase goods from Jen's company, or the tokens might be stock shares in Jen's company. So now we can also maintain shareholder registries on this open source communication and financial system without needing to use a centralized system or a government database. And some of the biggest ones of these ICOs last year were Bancor, that raised $150 million in 3 hours. I visited Bancor in Tel Aviv in Israel in February, and 1 or 2 months they were just 5 guys in the basement, and then 1 or 2 months later they raised this gigantic amount, and that was quite crazy. And then in July, I think it was, Tezos raised $230 million in their ICO. These amounts are now similar to the IPOs we're seeing on stock exchanges in Scandinavia. So I think that's quite interesting. And I think this can be a paradigm shift in venture capital. Because imagine if we were in the middle of the 1990s and we think the internet is going to be a big thing and we have $2,000 to invest. Well, investing $2,000 in Amazon or Netscape or whoever was around at that time would be impossible because they wouldn't accept such a small investment. They would have too much overhead to accept that. But now with blockchains, raising funds and maintaining token holder registries have become so efficient that you can participate with any amount, even just $100. And so I think this can be an incredible democratization of investments when anyone, anywhere can participate in these funding rounds, and it will unlock gigantic amounts of capital that entrepreneurs couldn't access before from regular people. And this will give us more startups and more innovation. So what are some of the applications happening just around the corner? Well, when we have money that is born digital, we can do stuff that we couldn't do before, because we can now program money to have certain behavior given certain conditions. So, for instance, you as a company, you could issue 1 million kroner to your IT department, and then you could program this money such that it can only be spent with specific suppliers. It could only be spent with Microsoft or IBM, for instance. Or as a government, you might decide that you issue welfare to your unemployed citizens, and then you might program this money such that it is blacklisted and cannot be used in the local casino or the local pub, or Systembolaget in Sweden. And of course this might be controversial, and it's of course a political decision whether you want to do this, but it's sort of similar to the food vouchers that are still in use in some countries today. And even as charity organizations, you might use this to make sure that your aid to developing countries do not end up in the corrupt dictator pockets. And that's exactly what the Red Cross and Save the Children, and even the Danish Foreign Ministry, I know, is looking into how we can use blockchains for verifying where the money goes. And when you can program money, you can also do even more complex stuff. So just to give one example, if Jen is creating a coffee business and she has a lot of coffee in stock and she worries about the price of coffee, it might go down. On the other hand, Tina here might want to invest in coffee as a commodity. They can now create a smart contract on the blockchain, and they each pay in 1,000 euros. If the price of coffee goes down by 50%, then the contract can automatically return the entire amount to Jen. So she lost money in her coffee stock, but she gained money in her blockchain account. Or if the price of coffee went up, then the contract might return only a little to Jen, but most of it to Tina. So now Tina made a profit on her coffee investment. In the traditional financial world, this would be called a contract for difference, or a CFD. But you can also do the same thing on a blockchain. And of course, you can do it with any kind of thing you can measure the price of, not just coffee, but also gold or currencies, or even other contracts, or real estate, and so on. And then we step into the concept of tokenization of everything. And it really also steps back to when I mentioned that you can put anything on the blockchain that you can represent digitally. So for instance, today we deal in, when we do real estate transactions, we need lawyers and attorneys that charge large fees, and we even need to pay fees and taxes to governments. But we could also do it by issuing deeds on a blockchain as a token, which can be sent around on the blockchain to different blockchain accounts. And this is actually a demo that we did with Nets, the payments company. We did a collaboration in Coinify with Nets, where we issued a real estate deed on a blockchain, and we were able to connect this in a smart contract with the the validation of the condition of the house, so the transfer would not be accepted before an independent party had validated the condition of the house. But you can imagine this might be even more important in developing countries, where in Honduras there's an example of a corrupt government employee that went into the central government database, deleted the name of the real owner of the house, and then put in the name of his uncle instead. And now the house was owned by his uncle. Because the blockchain is immutable. I know Simon said it isn't completely immutable. I would say then almost immutable. It's at least impossible for one single government employee to go in and change the record in a blockchain system. So I think this will happen. But today it's only expensive stuff that we create property registries for, because every time we make a transaction, it's really expensive. But when we can make this so efficient using blockchains, then we can make property registries for anything. So when you buy a watch or a smartphone next time, you might get a blockchain token that shows you are the real owner of this smartphone. And then when you sell this smartphone on eBay, the buyer can verify that you're the real owner of the smartphone and that you're not dealing in stolen goods. And we can also put intellectual property such as patents or copyrights, or even small things like a piece of music or a news article on a blockchain, and decide who is allowed to use this or allowed to consume it. And it also leads us into the whole thing of supply chain, because as you all know, there's this concept of the bill of lading, which we could also tokenize and put on a blockchain. And so if we had this token going all the way directly from the supplier in another country, going all the way to the final recipient in another country, it would be much easier to track exactly where it has been, at what point in time, and if there is something wrong, like if this case of apples gets infected, it would be much easier to find out where did this infection come from. And then there's of course the whole potential for making things more efficient. And as you might have heard, Maersk did a demo with IBM on how to use blockchains for supply chain management. And what they found out was that they think they could save 20% of their operation costs by digitizing the bill of lading on the blockchain. That was quite a huge number, I think. And when Barclays did a similar experiment, also in supply chain management, they discovered that instead of having to wait 20 days, the supplier could get paid in 4 hours. So there was a potential for really minimizing the costs of credit. And it has to do with a lot of these processes potentially being able to be automated. Because one thing you could do is that if we have these contracts implemented as smart contracts, then whenever the recipient receives the good and thus also receives the token, the payment can be automatically released by a smart contract, and the recipient knows this is going to happen because he can read it in the contract on the network. He doesn't need to trust all kinds of other middlemen in order for this to happen. It's automatically enforced by the smart contract. And then there's the prospect of using blockchains for recording not just the ownership history of vehicles, but also their performance and maintenance history. So if you as a seller of a vehicle had recorded the entire performance and maintenance history of a vehicle that you're selling, then the buyer would be able to look into the blockchain and see exactly at what dates were these records made, and that they were not tampered or changed afterwards. And so these prospects in transportation is some of the stuff that the blockchain in transport alliance is looking into. And I'm not an expert in transportation. I've been mostly dealing as an entrepreneur in finance and payments. But this is an American organization, and I think they have mostly American companies. But what they want to do is to standardize how blockchains are used in transportation. So I think that's something interesting to keep an eye on. And some future applications as well. That will not happen tomorrow, but in some years. For many years we've talked about how can we digitize political elections, and some very good objections have been raised. For instance, if you're using a centralized government system to collect your votes, how do we know that they are not checking who is voting for what? How can we stay anonymous as voters when we're voting? Well, blockchains can address some of these objections. On a blockchain, it's possible to issue a voting token where you know who you're sending the token to, but when the person returns the token in order to make his vote, he can do it in a way that is anonymous. And when you as a government publishes the election result, you can do it in such a way that each voter can actually cryptographically verify that his vote was counted as part of the election result. And that sounds really fancy. How is that possible? But some clever cryptographers found a way to do it, and this can definitely help with corruption in countries that have corrupt political election systems. So Africa, South America, and such places, Eastern Europe, might be the first places to benefit from this. And for my last and final application, it's also going to be the most futuristic one. Because I have a robot vacuum cleaner, and I love it. But one thing that I cannot do with my robot vacuum cleaner is walk into the local branch of Nordea and create a bank account for my robot vacuum cleaner. If I did that, they would probably laugh at me and deny it. And that's because it's almost like we're treating robots today as second-class citizens. We're discriminating against robots by not allowing them to get bank accounts. But blockchains don't care about this. On a blockchain, anyone and anything can get a money account. So in a few years, when we have driverless taxis in the street, perhaps it's not owned by Uber or a taxi company. Perhaps the taxi is sort of self-owning, or at least it has its own. Well, it has its own computer, and on the computer it has its own blockchain money account, which only the car itself can access. So when I as a passenger get into the car and I pay the car directly into its own money account that only the car can access, then the car can take this money and go to an electricity station and pay for its own recharging. The car can go to a mechanic and pay for its own repairs. And maybe after a year, the car has made a nice profit. Then the car can go to a car dealership and buy a second car, and then copy its own software to this second car, such that the second car is working as an employee of the first car, or maybe the second car is its own independent entrepreneur trying to make a profit and replicate into even more cars. And this may sound far out and crazy, but what we did was just that we combined two technologies that we know are coming: blockchains and self-driving cars. And by combining them, this becomes possible. And it's not just self-driving cars. It's also the coffee vending machine, or the solar panels on the roof, or the drone delivering packages. All kinds of machines connected to the Internet of Things can now not just communicate with each other, they can also pay each other for goods and services. And then when you realize that IBM and Gartner estimate that in a few years there will be 50 billion machines connected to the internet, then you realize that the biggest consumer group in financial services will not be people, it's going to be machines. And so sometimes we talk about financial inclusion of people in developing countries, which blockchains can also help with. But this is actually financial inclusion of AI and robots. And I think it's going to be incredibly interesting, and it's also going to give us a lot of really weird questions that I think we'll have to ask and eventually answer. For instance, if you have a self-driving car that is also self-owning, and it runs into your house, then how do you get restitution? Who pays for those damages? Will we need to be able to sue robots? It's a weird question, but I think we'll ask it soon.
But wouldn't that also be part of the big issue we have with robots also taking more of our work? So making them also able to make money also makes it possible to tax them.
Yeah.
But it is interesting, because if a physical person owns every device, directly or indirectly, then the system is in control. And in the Roman Empire, the slaves were did the deals.
Mm-hmm.
Many families they just had slaves, and the slaves did all the trade.
Yeah, so it might be a
What's the
similar
difference between an AI box and a slave?
Right. Yeah, as long as they stay slaves, I think we're safe.
Exactly.
And maybe that's why we should stop treating them as second-class citizens, so they don't rebel. But yeah. Yeah. And I have just a few minutes on how you as a corporate business could proceed in this area. And since I don't know all your daily business processes, it's going to be fairly high level. But I'm also going to talk a little bit about how we approach this in Coinify as an entrepreneur. So I think if anyone who dives into this, of course, needs to start learning about the subject, and you need to have some experts on your team in this. And then you can start identifying what are the areas of our business that can be affected by this, or where we want to stay ahead of the curve. And then I think there's two overall next steps. One is that companies can try to do the processes internally and identify their own solutions and implement them as demos and push them to production. The other way of doing this would be to go to make external partnerships, where you identify startups, or you create a lab where startups can come to you, and then you might invest in some startups, or I mean invest here very broadly, in the sense that it could also be in order to invest in building interfaces that that startups can use to work with your offerings. And I think these are the two. This is the main dichotomy when, as a corporation, you need to decide how do we attack this. And my gut feeling is that the internal approach really is the dominating one in Europe. I don't have numbers to back this up, but this is my gut feeling. While the external approach is more used in the US, is my gut feeling.
But don't you make a combination of those two? It doesn't have to be either or.
Yeah, I think you can make some kinds of combinations. Like you can, if you build if you have sort of a lab where you invite startups in to work with your products, and you give them some of your data, or maybe you just give them random data that looks like your real data, but it's not your real data. Then I guess that could be a combination. And but if you're doing that only in order to steal ideas from the startups and then do it yourself anyway, I don't know if that would be honest. So I think the honest way to do that would be that you in the end up investing in some of these startups. And I do think that, and I think Simon agreed with me here, that this is where you're most likely to get the real innovation. It is just incredibly difficult to being used to all the same processes and then suddenly come up with new systems. So I think this is the most likely way to go, and it's also my impression it's more common on the other side of the Atlantic. And it might be because that in the US it seems the market is more dynamic. You have more new companies that have tried disrupting someone themselves, so they know they can be disrupted. In Europe, the market is a bit more static. We have more older companies that tend to be maybe a bit more proud in what they've accomplished, and a bit more certain that they are not going to be disrupted. In Coinify, we are a startup ourselves. We have 35 people now, I think. But one of the first partnerships we did was we partnered with Nets, the payment company. And the first thing we did with them was to create the real estate transaction demos that I mentioned before. And we also did a microtransaction demo with Nets, where if you want to read a news article online, we implemented microtransaction in such a way that every time you scroll with your mouse, you're making a small payment in cryptocurrency. So that might even be called nano payments and not micropayments. But we also received an investment from SEB, and I think that was really interesting, and I thought it was a great tease for us to say to the Danish banks that look what you missed. The Swedes are coming to take over, and it's been part of SEB's strategy to invest in startups. So they founded SEB Venture Capital to do this, and for us it was also just a stamp of approval because, as you know, Bitcoin and such has had this sketchy reputation, and so for us to get a bank on board was very valuable when we talked to other banks or to the authorities, and it was sort of a stamp of approval. So for you, it's also something you can use, I think, when if you're looking to partner or invest in startups. You're not only bringing in money; it's also a stamp of approval that you can leverage in getting good deals, I think. And yeah, so today we trust in financial, legal, and political institutions that rely on human moral integrity and the ability to avoid human errors. But now I think we're entering a time where these relations between humans and companies and even robots can now be defined and enforced using the blockchain world computer instead, by digitizing trust, or even in some cases making trust obsolete. So if you're in an organization today that has trust as part of your offering, then I think you'll be affected by blockchains in some way. And I think that whether it's financial transactions to the Philippines or it's digitizing supply chains, blockchains are spurring wealth creation and cooperation and legal and political transparency in a way that we've never seen before. And I also think in a way that blockchains are providing us with the opportunity to solve some of the most difficult problems in businesses and as humanity, if we are ready for it. So those were my words. I hope there's time for questions, but I'll also encourage you to install a blockchain account on your phone, because nothing really gets you the feeling of what's going on as if you try it yourself. So this is a wallet where you can store Bitcoin and Ether. You can buy some Bitcoin with your credit card from Coinify, so there's also a hidden advertisement there. But I really think it's a good way to get to know it.
Thank you.
Good.
Thank you very much.
Very good.
Questions?
Well, why is so much black money? If it is so safe, why is it the home of so much black money?
Yeah, why is there so much black money?
System?
I think it's been exaggerated a lot by the media. If we remember the coming of the internet in the middle of the 90s, most media mentions were also about how this is for pornography and gambling and so on, and it wasn't so much about what it can actually do. So I think the actual use of blockchains for criminal use is much, much lower than what it sounds like in the media. And there is a company called Chainalysis. It's partly Danish, partly American, but they work with Europol and some of the biggest American banks, and they estimate that less than 1% of Bitcoin transactions are to illegal drug markets. Less than 1%. And that we can then compare it to what the United Nations estimate, because they estimate that 1% of global GDP is dealing in illegal drugs. So if you look at these two numbers together, it doesn't look like that Bitcoin is being used for this more than the rest of the economy. There's also, yeah, of course, the traditional banks are really not saints. I actually think that if blockchains had been invented in the 1950s, I think, and regular bank transfers were invented today, I think regular bank transfers would have been made illegal, because it's so much more difficult to track the source of funds when you receive a regular bank transaction than if you receive a blockchain transaction.
In theory, that should be the case.
Yes, and most of the time also in practice. To give an example, in Coinify we do two things. You can buy and sell digital currency with us, but we also have a business department where we do payments for businesses. And we had someone who wanted to purchase a house in Denmark for about 1 million kroner, and he wanted to pay in Bitcoin. And when we do such a large transaction, we want to make sure that this is clean money and it doesn't come from drug trading or something. So we used this tool, Chainalysis, and I can actually show a screenshot from it. I have a bonus slide here. What Chainalysis does is that on the blockchain there's only account numbers. You don't have physical identities like names of companies or people. You only have account numbers. But if Chainalysis just knows one of your account numbers, then by big data analysis it can find out with a high degree of certainty what are your other account numbers. And so what they can do is that they can find out almost all of the account numbers belonging to Bitstamp. In this case, it's a Bitcoin exchange. But they can also go onto one of these drug markets, create an account. When they do that, they learn one of the account numbers of the drug market, then by doing this analysis, they can discover almost all of the account numbers of the drug market. And so when we receive a payment in Bitcoin, we can use this tool to see, was it ever in contact with one of the account numbers belonging to the drug market? And we could do this in 10 minutes. We could go 10 steps back in the transaction history of this payment and see this was clean money. This we can compare to if we had received this as a bank transfer. This was actually a guy from Ukraine buying a property in Denmark. Imagine if he had sent a bank transfer from a bank in Ukraine, and we, or our bank, wanted to check where does this money come from. Well, then first they would have to call the bank in Ukraine to ask where does this money come from. Then they would probably say you need a court order from the court in Ukraine for us to give this information. That might take half a year. Then they might say, okay, you have the court order. We can tell you that this money came from a bank in India. Okay, then you can start over in India. And to get 10 steps back in that process would be almost impossible. But we could do that in 10 minutes with this system. And I'm not saying this is perfect in the sense that it's perfectly transparent. I would say this has very high transparency of transactions, but less transparency of identity, in the sense that it takes a bit more work to see exactly the identity of the people involved. But going back 10 transactions is a much easier. So,
of course, you can ask can you ask the account holder to reveal his name?
If you only have the account number, you actually have no way to contact him. You don't have his email or no. But where most of the people are identified are through companies like ours, because we don't accept cash, and cash is still the most anonymous thing in the world. We only when people want to buy Bitcoin from us, we only accept credit cards or bank transfers. And so there we get an identity of the person, and then we also know his account number on the blockchain, because we need to know where to send the Bitcoin that he just bought. And thus we can create a link from a Bitcoin account number to a physical identity of a person. And we from time to time get requests from Swedish and Norwegian and Danish police who want to know the name of a person with this Bitcoin account number. And we tell them if they have a court order.
And in how many cases do you know? Historically, when you have had a court order, in how many cases have you found out?
So when the authorities contact us, it's because they've been able to use a tool like this to see that the Bitcoin came through our company. So they know the money came through our company. And so in 100% of the cases, we had this customer in our system and could tell them the name of him. But of course, if they discovered a transaction that was not linked to us, then we would not be able to find the name.
But the principle is if the tax system should work, it must be possible to be transparent at the end.
For the tax system?
Yeah. Otherwise we will have no taxes.
Well, I think I think there is a bigger problem with cash if you want to collect taxes, because hairdressers and bartenders and so on, they get a lot of cash today, right? So I think there's a lot more tax avoidance there, and also for individuals, at least in Denmark, I believe it's the same in Sweden. There is automatic collection of salary information, right, from the company to the tax authorities. But at least for companies, I think in every country, it's really up to companies themselves to tell the authorities how much did we make and how much tax should we pay. So already today we're relying on companies, to be honest, and blockchains don't fundamentally change that.
Do you, if so to say, you would cover all the world, it would be a very big system. Is there a limit for your system, or have you envisaged a limit?
Yeah. Is there a limit for how big it can grow? Well, there is, at least currently, there are some scalability challenges in the sense that I think Bitcoin can do 5 transactions per second globally. I think Ethereum can do maybe 20 transactions per second. That's nowhere near enough if we want to get to the levels of all bank transactions or all Visa card transactions in the world. So we need to scale a lot more. That's a technical problem, and by now there are really big resources being invested in this in order to solve this issue. And I know the people behind Ethereum are working on some very interesting stuff. And besides Bitcoin and Ethereum, there are about 1,000 blockchains today. Different people with different ideas on how can we build the best blockchain. And I think some of them will succeed in scaling to thousands of transactions per second.
But don't you need retraceability?
Yes, you for how the blockchains work today, you need to be able to trace the transactions. Yeah.
Wouldn't that make a maximum?
Yeah. So today, each computer that is part of the global of the world computer is actually receiving and verifying each and every single transaction. And that might not work if we need to do 10,000 transactions per second. So one of the proposals from Ethereum on how to scale is that we will create what they call shards, which is separate parts of the network. So we could have a shard where all banks do their transactions. We could have a shard where all supply chain bill of lading transactions are made. We could have a shard for financial derivatives. And so most of the time we will not need to make transactions between those different parts of the system, right? So most of the time we can do just only these. In some cases we will need to make a transaction between different systems, and then we would probably need to pay a bigger fee for the people that actually still ran very big data centers where they had all the transactions. But it's I would say it's the main challenge of blockchains today. It is how to scale. No one knows exactly how it's going to be. I just think that with all the resources and all the people that are interested in this now, and all the big companies, I think someone will find a solution.